Stop what you are doing right now. Gold just smashed another record high, zooming past $3,700 an ounce. And this rally is far from over. This isn't just noise. This is a major move driven by America's shifting economic future and global chaos. You need to know the three massive forces pushing gold higher and exactly what to watch this week that could send prices absolutely exploding. Last week, the Federal Reserve cut the benchmark interest rate by a quarter point. This was the first rate cut of the year, restarting the easing cycle after a full year. This decision is huge because it signals a major change in priorities. The Fed is shifting its focus from worrying constantly about inflation to trying to guarantee employment for Americans. Now, the Fed chairman was cautious, calling this just an insurance cut or a risk management move. He made it clear they aren't committing to some aggressive, rapid easing cycle. They're taking it meeting by meeting. But Wall Street is way more optimistic than the Fed is. Traders are betting heavily that we will see nearly 2 more rate cuts this year. Specifically, there is about a 93% chance of another quarter-point cut coming in October, followed by another one in December. Looking out further, many market players expect short-term interest rates to drop below 3% by the end of 2026. If that happens, you are looking at a sustained, prolonged boom for gold. Lower interest rates are rocket fuel for gold. Since gold is a physical asset and doesn't pay interest, holding it becomes way more attractive when rates drop. The cost of passing up interest income shrinks, and investors flood into the metal. Let's look at the numbers. Gold has been an absolute winner this year, surging by about 42%. How does that stack up against the stock market? It crushes it. The S&P 500 is up around 16% this year. The Nasdaq Composite, up about 26%. Even the Dow Jones is only up about 9%. Gold is beating every major U.S. stock index by a massive margin. Now, this rally isn't just about rates. There are 3 huge engines powering this monster bull run, and they are all firing simultaneously. Engine number 1, global uncertainty. Geopolitical chaos is a primary driver for demand. We're talking about severe situations like missile strikes overseas and escalating tensions in Europe. Just recently, NATO forces had to intercept Russian fighter jets over European airspace. When the world feels unstable, gold is the ultimate safe haven, serving as a protective shield for wealth. Don't forget the trade tensions either. Concerns over President Trump's sweeping global tariffs are still keeping investors edgy. Trade wars and tariffs create economic uncertainty, which pushes investors directly towards gold. Engine number 2, massive central bank hoarding. This is maybe the most reliable force sustaining prices. Central banks around the world are aggressively buying gold in huge quantities. They aren't doing this randomly. They are actively diversifying their reserves and slowly reducing their reliance on the US dollar. This constant, colossal demand, especially from emerging markets like China, acts as a durable floor for gold prices. They are pouring billions into the market, ensuring that any small price dip is quickly reversed by major purchases. Engine number 3, Western investor confidence. For years, the rally was mainly driven by central banks and demand from overseas. But that is changing fast. Now, American and Western investors are starting to pile in too. We are seeing steady money flowing into gold investment funds. This means ordinary investors are finally waking up to the profit potential and safety gold offers. So if gold is surging because of rate cuts, why hasn't it shot up even faster? We have to talk about the US dollar. The dollar actually showed some muscle recently, rebounding after the Fed announced its cautious cut. This strength is a drag on gold. Since gold is priced in dollars, a stronger dollar makes the metal more expensive for international buyers. This creates a powerful tug-of-war. Rate cut expectations pull gold up while the resilient dollar tries to cap the price. The fact that gold is maintaining its strong upward move, currently trading around $3,720, despite the dollar trying to recover, shows just how intense the underlying buying pressure truly is. Speaking of impressive moves, let's quickly talk about silver. If you thought gold was hot, silver is exploding right alongside it. Silver has surged by about 40% this year, mirroring gold's performance. It is currently trading near a huge 14-year high. Silver has a dual personality, giving it extra fuel. It is both a safe haven metal like gold and a critical industrial commodity. Its industrial demand is soaring, especially from the clean energy sector. A massive part of industrial silver demand now comes from solar panel manufacturing. It is also essential for electric vehicles and 5G infrastructure. The supply for silver isn't keeping up with this demand. Analysts are confident silver is heading towards the $44 mark soon, with some experts seeing the potential for it to eventually surge towards $50. So what should you be watching this week? The market is waiting for two critical things. First, we are expecting a ton of speeches from key Fed officials this week. Pay close attention to the comments coming from the Fed chairman on Tuesday. His statements will clarify if the Fed is leaning more cautious or if the rising economic risk might accelerate future rate cuts. Second, the biggest data release of the week is the Core Personal Consumption Expenditure, or PCE index, coming out on Friday. This is the Fed's absolute favorite inflation checkup. If this report shows inflation cooling down, it gives the Fed a clear green light to cut rates faster. That scenario would be like pouring gasoline on the gold rally. If the number is hotter than expected, however, expect the dollar to spike, putting temporary pressure back on gold. On the charts, gold looks incredibly strong. The momentum is powerful, and dip buyers are rushing in quickly whenever there is a small pullback. Technical signs suggest we are holding strong right around the $3,700 level. As long as gold stays above that $3,700 support zone, the technical bias points to further upward movement. A decisive breakout above the recent peak near $3,708 would likely trigger a surge towards the $3,750 region. Longer term, the forecast is wildly optimistic. Analysts are predicting gold is on a clear path to the major psychological level of $4,000. Some experts believe we could hit $4,000 by mid-2026. There are even extreme forecasts suggesting prices could zoom towards $4,500 next year if investor demand keeps accelerating. The core message here is that gold is in a clear, long-term upward cycle. Remember, investment cycles for things like real estate and bonds usually last 10 years or more. It looks like it's now the turn of precious metals to run. This entire precious metals boom is being driven by powerful, foundational factors: cautious rate cuts, massive central bank demand, and global risks. This isn't just a quick pump. This is the beginning of a prolonged trend. Keep your eye locked on that inflation data coming out on Friday. If the numbers confirm the need for faster Fed easing, gold is set to push into territory we've never seen before. That's the quick breakdown. Stay informed and make smart choices. If this analysis gave you a clear picture of where gold is headed, please hit that like button. Don't miss out on any crucial market moves, subscribe to the channel, and most importantly, ring that bell icon so you get notified the minute we drop new content. Thanks for watching, and I'll catch you next time.